Every basic financial word you should understand at 20 explained in 5 minutes. First, an important truth. Most people struggle with money not because they're irresponsible, but because they were never taught the language. Finance feels intimidating because it's unfamiliar. But once you understand the words, the system stops feeling mysterious. Money follows rules. If you don't know the rules, you still play the game. You just lose more often. Income is money coming in. Salary, hourly wages, tips, side hustles. Most people only earn active income, money tied directly to time. When you stop working, income stops. Understanding this early matters because wealth is built by reducing dependence on time. Expenses. Expenses are money going out. Rent, food, transportation, subscriptions, lifestyle upgrades. Expenses don't need to be bad to be dangerous. They only need to grow faster than income. If that happens, you can earn more and still fall behind. Cash flow. Cash flow is what remains after expenses. Income minus expenses. Positive cash flow gives you options. Negative cash flow removes them. Wealth doesn't start with high income. It starts with positive cash flow. Savings is money set aside for safety. Emergency funds, unexpected expenses, short-term goals. Savings reduce stress. They prevent panic decisions. But savings alone don't create wealth. They protect stability, not growth. Inflation. Inflation means prices rise over time. Your money buys less every year. Even if you do nothing wrong, inflation quietly punishes inaction. This is why leaving money idle for decades is risky. Assets. Assets put money in your pocket or grow in value. Stocks, businesses, real estate, funds. Assets work even when you don't. They are the foundation of financial independence. Liabilities. Liabilities take money out of your pocket. Debt. High-interest loans, anything that costs money without producing income. Not all liabilities are evil, but unmanaged ones drain future freedom. Net worth. Net worth is what you actually own. Assets minus liabilities. Income shows how fast you earn. Net worth shows how well you keep and grow it. Two people can earn the same salary and live completely different financial lives. Debt is borrowed money that must be repaid with interest. Credit cards, student loans, car loans. Debt accelerates outcomes. It can help or hurt faster than cash. Understanding interest determines which one it becomes. Interest is the price of money. When you borrow, you pay it. When you invest, you earn it. The goal is simple. Be on the receiving end more often than the paying end. Credit score. Your credit score measures reliability, not wealth, not intelligence. It determines access to loans and how expensive those loans will be. Good credit reduces friction. Bad credit increases cost. Budget. A budget is a plan, not a restriction. It tells your money where to go instead of wondering where it went. Budgets create awareness. Awareness creates control. Investing. Investing means putting money into assets expecting long-term growth. Stocks, index funds, businesses. Investing is delayed gratification. It rewards patience, not impulse. Risk is uncertainty. Higher potential reward usually comes with higher risk. Avoiding all risk guarantees stagnation. Managing risk creates progress. Diversification. Diversification means spreading risk. Different assets, different industries. It reduces downside, but also limits extreme upside. Taxes. Taxes are mandatory payments to governments. Income tax, sales tax, capital gains tax. The type of income you earn determines how much you pay. This is why structure matters. Compound interest. Compound interest is growth on growth. Money earning money, then earning more money. Time matters more than talent here. Starting early beats starting big. The final reality. You don't need to be a finance expert at 20, but you must understand the basics. Because money punishes confusion and rewards clarity. Once you learn the language, you stop guessing and start deciding. I'll be making more videos like this soon. Subscribe to see them.